I think a unicorn tag comes with it a lot of limelight and a lot of public recognition and all of those things. But honestly, for us, we really saw it as a distraction. We are going to be the most innovative company in our space. That's been our brand promise. That's what I promised to our merchants.
You went from about $1 billion valuation to $7.5 billion in about 12-month time frame.
The first big thing that UPI solves is it's an instrument built for the smartphone world. Broad macro outcome is that any company which is not AI first by DNA is going to lose. If you look at today, because ATMs are very rare, people carry less cash in their pocket. Card was not an instrument built for the online world. You need to train your entire workforce on AI. You need to embed AI into everything. So if you're not shipping out new products, you're getting obsolete every day.
Yeah. Just at some point, almost on a whim, I think just probably copying from Flipkart, we said कि cash on delivery चालू करते हैं. And our volume went up 3 times. And I was like, magical.
So if something new happens in the ecosystem and we are not the first ones to do it, I'm the first one to catch it and ask my team, why did we miss out on this? What is the reason? I spend a lot of time talking to our customers. So irrespective of the discussions and meetings and internal reporting that I'm part of, I speak to at least one customer a week.
Harshil, welcome to SparX. As I was preparing for this podcast, I was going through some of your older interviews, reading about Razorpay journey and all that. And one very interesting story I came across is very early on in your journey when I think you were interviewing with YC, Sam Altman asked you to try to look older. Can you explain the story? Like, that's, why did he has to advise you to do that?
Yeah, so when you're starting, one of the biggest challenges that we had, like unlike a software startup or just an online startup, when we're building something in payments, you need to get certifications and bank approvals. So we were facing a lot of challenges getting through bank approvals. I was 24-year-old, 23-year-old, and I would go to bank meetings and two college boys just out of college in t-shirts and jeans, and nobody took us seriously. So I had a meeting with Sam because he was heading YC at that point of time on progress. And he said, what's your biggest bottleneck? I said, like, banks don't take us seriously. So we go to those meetings and they think we don't have experience, we don't understand the space and so on. They said, why they don't take you seriously? I said, because we look young, you're young. And we don't look like we belong there. He said, if the problem is, do you look young? Why don't you look old?
And you tried doing that?
Yeah. And then I said, like, what do you mean? So he said, like, yeah, we wear a suit.
Clearly, you've taken the advice to the heart here.
Put a bit beard and all of that. And then look a bit older, and then yeah, that makes sense. I mean, if the problem is that people don't feel that you belong there, try to dress up like them. And in banking and financial world, some of these things matter. People judge you how you look.
So today, do you own a lot of suits?
Yeah, that was the first suit I got. Now I have a lot of suits. I'm still halfway there. I'm not fully in a suit.
Tie वगैरह नहीं लगा.
Tie नहीं लगा पाता. Tie is still very hard, but a blazer or something, like look a bit older, especially when you're looking bank meetings. And it's basically you're trying to look that you belong to that place. And I think
it's ironic, that advice coming from Sam Altman, because he still looks like a boy.
But you notice one thing, I never saw Sam in a suit. But when he was in India to meet the Prime Minister and a lot of government officials, he was dressed up in a suit. So I think he follows his own advice in there.
Okay, fair enough. Yeah, I guess he knows the time, the occasion.
Yeah.
But you said you started this Razorpay effectively out of college. I think you worked for a few months. But let's just go back. I want to go back to a little bit of your college time as well, because I just noticed the connection that we have from you went to IIT Roorkee, and I grew up in Haridwar. Oh, nice. So in Haridwar, Roorkee are this twin town. So I have obviously growing up there, a lot of fond memories. But what was it like? Just take us back to what was your time in Roorkee like, and were you already thinking seriously about starting something?
Not about startup or so on. I mean, I don't think I knew the word startup, honestly. But one thing, in some ways, the seeds of Razorpay got sown in Roorkee.
Yeah.
And the reason I say that is, so when I got into Roorkee, I got into mechanical because the rank chooses your branch.
Yes.
And I had no interest in mechanical. I was always interested in computers and programming. So I used to feel like I'm missing something out because I'm not able to spend my time coding. So I used to interact with a lot of folks, and I found a bunch of folks, even when people who were in computer science didn't really get to code because you spend your classes only learning theoretical.
Yeah.
So I built a community of folks. We found like 7-8 folks around us who all were interested in coding and wanted to spend their evenings and weekends doing that. So we got together, we started this section called Software Development Section, SDS Labs in IIT Roorkee, where we got a space from the college, we started building stuff. We used to build application layers. And that's how it was like a kind of like a first startup equivalent experience for us to start something fresh. By the way, the group survives today. It still runs in IIT Roorkee. It builds software products on the side. And that's when I got to meet Shashank, my co-founder. Bunch of almost all the first 9 folks from Razorpay came from SGS Labs, the folks I knew and worked with, because we used to program together, build stuff together. In fact, I did my first fundraising experience there because we had to get money from the institute to build this. And I can tell you, after raising $700 million from VC, I can tell you that raising 1 crore from the institute was much harder than raising money from VC.
1 crore as a student is a very big deal.
And getting it from a government institute, like a government program, it's extremely painful because there's a tender process, approval process, so many signatures. So that was my first fundraising experience as well.
I think there's also probably preparation for, eventually dealing with regulators, I think.
In a way. Yeah. So that was our first experience. And that's when we left college, me and Shashank knew each other and said, we had a good time building this. Let's think if we can build something after college as well. And that's how...
Before we go deeper into Razorpay journey, I want to promote Haridwar a little bit more.
Yeah.
So tell me about your, Roorkee se Haridwar kitna jate the? Or kyun jate the?
Almost every week. And in fact, Roorkee is a small town. It used to be even smaller. I think now things have still come out. So at that time, I remember like the only McDonald's used to be in Haridwar.
Wow.
So and the only theater, proper movie hall used to be in Haridwar. So whenever we had to go to watch a movie and McDonald's, we would plan a visit to Haridwar. Almost every month we would go at least once. It was a 30-minute bus journey. So it just
like you feel very good, for somebody. Like Haridwar was a cool place for somebody.
Yeah. For us, it was the best place because you had a McDonald's, man.
Yeah. But yes, I am. Like, Haridwar is famous for many other things, but McDonald's movie theater, I wouldn't have guessed, but so, and you I think went to Schlumberger for 9 months but that's pretty early to quit your job and start, especially Schlumberger is a pretty well paying job. I remember even my college days, it used to be very much in demand, it's quite reputable. You get all this, postings outside, you start earning in dollars immediately. Yeah. Like that's how did you manage to quit solely?
Yeah, Schlumberger is a dream job for anyone who's a mechanical engineer, my degree. As I said earlier, like I had zero interest in mechanical engineering. So I got placed in Schlumberger. It was a day one placement, but I went there and it was a large MNC job. And almost on the second day, I realized this is not what I want to do in the rest of my life. Like,
you spent time on oil rigs and stuff?
Yeah, I went to oil rigs and it was a very hard job. It pays a lot, but you are literally doing manual labor. And I have a lot of respect. Like, oil field is great, but it was just not for me. I think for me, I realized that I like to code. I like to write softwares. I don't really like being on an oil rig and doing the activities.
But what experience with the oil rig? Like out of nowhere, you are just looking at distant horizon, sunsetting.
It's very funny, and it's a lot of adventure because you have to go in an oil rig in a helicopter. So they first do a helicopter training. So I had a training in Mumbai where there's a fake helicopter. They put you inside it. They dip you inside the helicopter goes inside a pool. It overturns. It flips.
Oh, wow.
And then you have to break the glass and come out of it. So you have to and you have to do it thrice to.
You need to tell your parents कि कर रहे हो college के through back.
Yeah, you have to do it thrice to be certified. So I did that. So that was like an adventure in itself. So it is an adventure. It's fun, but yeah, like it is also pretty boring, honestly, as a job because when you go in an oil rig, you work for one day, but you're there for a week. So you spend. Most of my friends there used to spend their time watching TV shows, watching movies and all of that because you had a job of one day, but you were 7 days on a rig.
Where were these oil rigs?
So I was first in Barmer, then I was in Mumbai, then I was in Abu Dhabi. So it was all around.
Got it. So you're pretty early. You said, "Mere bas ka nahi hai. I'm going to..." But not thinking about another job. It's like, how do you decide to commit? I'm going to just start a company.
Yeah. So what I used to do, as I said, like there was a very boring job. You had a lot of free time. So I just spend my free time writing code, building stuff. And I used to keep talking to Shashank. Shashank was in Microsoft in US at that point of time. To keep discussing things to do. So we didn't really think of leaving a job and doing a startup like that. Like we were doing our jobs. We use our free time to build something on our own. So whenever I had a holiday, a lot of holidays, I'd come back home, spend my time figuring out what to do. And for one of those things, when we were building one of the side projects where we wanted to basically build a social crowdfunding platform, not a startup, but more like a hobby thing. Yeah. And for that, we needed to accept payments. So then we realized it's quite complicated. It's very painful. We started spending a lot more time understanding this payments problem. Like, hey, why is this complicated? Yeah. And as we spent more time, we figured out maybe there's something interesting here. So maybe you can do something in this side. And that's how it slowly started building up in that direction. So it was never really a thought through experience that, hey, let's leave our job, do a startup.
Yeah.
It's something that happened organically. And at some point we got committed enough with that. Maybe there's something you can do full time.
Yeah, I think you started in 2014.
Yeah.
I know from my perspective, 2014, I was on the other side of the payment problem as a platform. Myntra was scaling rapidly.
Yeah.
In 2014 is when we merged with Flipkart.
Yeah.
And cash on delivery was the accepted wisdom of the day, that if you want to sell stuff online.
In fact, that is what surprised me. So there's almost every startup in India started by accepting cash.
Yeah.
It was easier to accept cash than to accept digital payments for most startups. And that made no sense to me.
No, I want to tell you a story. In 2011 or 12, we had some scale, but growth was very challenging. And just at some point, almost on a whim, I think just probably copying from Flipkart, we said, okay, cash on delivery chalu karte hai. And our volume went up 3 times. And I was like, magical. Cash aata nahi tha, sara wo baad mein separate problem.
But it is painful, but it's still, and that made no sense. It was like logically for me as a technologist, like the point of technology is democratization. Like social media gives everyone a voice, internet allows anyone to build a business. So like point of digital payments is anyone can accept money easily, cheaply, seamlessly, right? Like, and that's where we are today. But at that point of time, it seemed like a far-fetched problem. And we were looking at US examples. We were looking at companies like PayPal and Venmo and Stripe and Square, and it made no sense. Like, why is this so painful here?
I have not kept up with the whole cash on delivery scene, but abhi hota hai cash on delivery, khatam ho gaya.
Very limited. Like
Almost
it's
gone.
down to less than 20%.
Okay.
And that's also in limited categories, like high AOV categories. For small AOVs, it's almost zero now.
We'll cover some of your journey, and Razorpay is a phenomenal company. Have made lot of innovations and breakthroughs. But one of the other thing stood out for me, I want to just take you back to 21. You went from about $1 billion valuation to $7.5 billion in about 12-month time frame. How did it feel that time? So aisa lag raha tha ki well deserved, and we are now going to go to 50 billion. And how does it look in retrospect? And just how do you process that whole thing? Because, and not only about Razorpay, I also want to ask you a question, because something that whole period affected the whole ecosystem in a big way. So just from your perspective, being there and one of few companies to see this kind of 8x growth in valuation in 12 months. How did that pan out?
Yeah, so I think for us, we were not a company that raises too much money. We've always avoided raising too much capital, simply because we are a kind of business where too much capital is not useful to our growth. So in a lot of consumer companies, capital drives growth. For a B2B company, the pro drives growth. For us, and you can't really fast track growth just because you have $100 million more in the bank. You can't suddenly add 10,000 more engineers.
Slay better.
It makes it easier to hire, but you can't suddenly hire that many people and then say, hey, I'll build 20 more things now. Right? There's an organic build out. You can fast track it a bit, but like the difference between 50 million and 100 million is not 2x. Right? So that's the reason we tried to raise always limited amount of money. So we became unicorn in 2020, and I think that was a big that was a big delta, because honestly, I think a unicorn tag comes with it a lot of limelight and a lot of public recognition and all of those things. But honestly, for us, we really saw it as a distraction. Because as I said, in a consumer company, all of that is useful. A lot more limelight, a lot more media coverage, a lot of news coverage. It drives behavior because people know about you and the rest.
Let me understand. You started companies, I don't know, you probably must be 23, 24 in 2014. You became a unicorn 6 years down, with probably about 30 or so. And you're talking, in so maturely ki, being unicorn was a distraction for us. Hame zyada paisa raise nahi karna tha. Like, this is sounding like way wise beyond, someone who's...
I don't know if it's wise. I think it's just the approach, right? So I'm like, that's the kind of founders we were, right? So and that's why we chose B2B, right? Like, so even when we started, most people typically go in B2C. At least in 2014, the wave was B2C, and most companies would go to B2C because B2C had the limelight, B2C had the valuations, B2C is where the money was chasing, VCs were chasing, where so many VCs would come to us and say, hey, why don't you do B2C? We'll give you a better valuation, we'll give you a lot more money. We were the kind of founders we were. If we thought like that, then we would have gone into B2C.
Yeah.
The reason we went into B2B is because we felt that this is a problem, we relate to it more. And honestly, I came from simple feeling that, hey, if I build something and I sell something, I need to earn for it.
Yeah.
Right? That works in B2B. That logic doesn't work very clearly in B2C. It is a very different path where you have to first grow and then monetize. We were always clear that we want to monetize whatever we built. And so because we came with that thought process, that's why we built Razorpay, and that's why that shaped how our journey used to be.
Right. And I mean, you guys at Razorpay significantly moved the needle on how payments are done in the country today. why is so hard? Why is, when you think like, I give my credit card online, you call an API somewhere, you get a confirmation or rejection, you complete a transaction. But it has, taken probably, I think, even 2017 when we, 2007, when we started Mintra, we used to, I think, use something called CC Avenue or something. It has taken almost, I think, 13, 14 years to truly solve digital payments. Why it is so hard? I think maybe for our listeners, can you just break it down? क्या difficulty इतनी है मतलब
Yeah. So first of all, I don't think digital payments is fully solved.
अभी भी नहीं हुआ
I think there's a lot more. I think if as a consumer I were to speak, the end state of digital payments has to be seamless, like invisible. When you're buying something, you don't want to think about payment. Payment is a obstruction, right? Like so, and you were in Myntra, you would see payment as a obstruction. It is a place where failures happen. It's a place where people drop off.
Yeah.
Right. So the smaller you can have, the smaller footprint you can have of payments, the better it is. So unlike a lot of consumer companies which will maximize time spent on their app, maximize the amount of time you spend, for us, the actual goal is to reduce the time spent on us. So if a consumer spends the lesser amount of time on me, the better it is for me because more transactions will succeed. Like payment is a distraction. So people don't want to spend time there. Of course, it used to be a minute to completion. It's dropped down to 30 seconds today. In the end state is going to be less than a second where people, I want to buy something, I'm authenticated automatically and the transaction completes.
Today you're saying it's 30 seconds.
It's 30 seconds.
End state 1 second when?
Sorry?
End state wala 1 second कब आएगा?
I think a lot of stuff is happening there. For example, recently biometric authentication has been kind of opened up by the regulator. So biometric authentication should take it away. Today, OTP is still a very harsh step. It takes a lot of time. You have to wait for the OTP to come. You have to enter the OTP. Then the transaction completes. There's a lot of drop-offs there. So I think that step alone takes about 15 to 20 seconds. And then 10 seconds is here and there and the transaction flows. So 20 seconds of OTP step is going to get down to 10 once we move to biometric, 10 or 5. And then everything else is going to start shrinking from there.
Got it. So let's just go back to the difficulty of this. You guys have been at it for 12 years. Many other companies, and you guys are extremely smart, dedicated, focused, entrepreneurs and product builders and engineers. What are the difficulties? Why it has taken so long, and we are still far from what you are describing as the eventual goal?
Yeah. So first is when the ecosystem started. See, some of it is maturity of the ecosystem, some of it is maturity of the regulation, and some of it is maturity of the consumer itself. Right. So when we started in digital payments, let's say 2007, which is when you said, but 2005 or 4 is when it practically started in India, digital payments in a big way. I think a lot of more consumers were coming online for the first time. So rightly so, the regulator had to put a lot of checks so that the consumers are not defrauded, because even today we see people give their OTPs all upon. So OTP was a step that was introduced, and it was mandated by a regulation, I think in 2004 or 2006, where OTP was made mandatory in India across the board, mandatory to customers. That was the first step. But even then, the first step, even before that, was consumer adoption. The amount of bank accounts in India still not reached that threshold, and that mostly happened during demonetization. Where we had enough bank accounts that everyone at least had an instrument to pay online, right? So that's first. Second is there are a lot of moving parts. So the standard instrument that was brought to India as a first instrument was cards. Now cards is still very popular in India, but cards is not really a digital instrument. So if you look at card came even before internet came in. So the complexity of making a card payment online is inherent because card is not really a digital instrument. So you think about it, like when you to make a card payment, you enter a card number, you enter an expiry date, you enter a CVV, then you enter your name. They don't look like online.
Sometimes PIN code doesn't match, and you
like imagine if you to enter a website, would you ever enter 5 fields and then an OTP? Like it doesn't make any sense. So card was not an instrument built for the online world. And that's why we had to be, as an ecosystem, we have added a lot of patchwork and stuff to make cards work online. So it's not a natively online instrument. That's the first part. That UPI changed that game massively because UPI was an instrument built for the online and smartphone environment from day one. So UPI is built for smartphones where you're paying somewhere, you're paying by Google Pay, Phone Pay, you tap, it goes to the app, you complete your transaction, you come back. There is no entering of 5, 10 fields and OTP and all that. So that was the first big delta that happened. After that, I think now we are trying to see how do we make it even more seamless. So things like tokenization, card saving, all of that is starting to become more popular because now we are reaching a point where customers know how to do online payments. The businesses know how to accept online payments. The regulator understands that people are getting comfortable with online payments. I think now we are reaching that point where we are saying, okay, how do we make it more seamless from here? And that's why in the last couple of years, we have saw things like UPI autopay come in, tokenization come in. All of these things are designed to make payments more seamless. So if I just break it down, the first step was adoption, where we started building adoption, and that's why we focused a lot more on how do we bring people online. Second step was how do we make it feel more secure and trusted. So that's where things like mandates, consent systems, two-factor authentication, all those came in. I think now is when the ecosystem in last couple of years is when the ecosystem is starting to focus on convenience. Okay, people are online, people are paying and paying in a trusted way. How do we now make it more convenient? And that's where things like auto pay tokenization have started to come in. As I said, recently the regulator has released draft consultation on making biometric authentication possible, which will be the next big step towards making it more seamless. So I think it's a journey. I'll give it maybe. It's hard to put timelines in tech world, but maybe next 3 to 4 years, where we'll reach the stage where I'm saying where the card payment timeline should drop down, or online payments timeline should drop down from 30 seconds down to 10 seconds. Maybe.
Got it. And let's explain this idea of biometric payments. So it's you walk into a store, and I know you do like a lot of work with the small and medium businesses as well, and you just put your fingerprint and payment approved. Is that, or you look into camera with your iris or face?
There's a better way. So because that will require a device on the consumer side. It's simple. You tap. I think in US you have Apple Pay, right? So you tap your phone on the terminal. Your phone asks for your Face ID, and done. The phone already has your Face ID,
right?
So you don't need a separate device.
Got it. The phone becomes the payment system.
So your phone everywhere.
Right.
Tap the phone, give your face to the phone. You're done. The transaction is done. You move on. And I think that's not very far, by the way. The tech is there. The tech for the Face ID part is already there on the phone. Every phone has a Face ID. The tech for adoption is there. We just need to stitch it together. Not very far.
And regulator is comfortable in it.
Regulator has recently released draft consultation on it. They're going to open it up. So.
And I can see this, using phone in the offline environment. What's the online equivalent?
Same online world. You want to buy something, let's say on Flipkart. Your card is already stored. You choose pay. Instead of entering OTP, your Face ID pops up. You give your Face ID, transaction is done. The Face ID works as your second factor.
Right.
Again, the tech is there. You're just about to, we just have to package it together.
Let's talk about UPI. UPI is now much celebrated. I think everybody listening to this will have their multiple UPI accounts. I think PhonePe and Google Pay, I think together would have burnt, $1 billion educating people over those last 3-4 years. But let's try to explain what is UPI. Someone who doesn't work at Razorpay, who is not an engineer. What is happening behind the scenes? Why is UPI such a big deal?
Yeah, so first of all, like people see UPI as a payment instrument. I'll go one step further and say it's actually not a payment instrument. Payment is just one application of UPI. UPI is a consent mechanism. It's a way for people to authorize and give consent to something. Today it's been used for payments, but it could be, it is very extendable to do multiple other things. So tomorrow I'm saying you could even do something like a KYC on top of UPI. It's that broad based. So the first big thing that UPI solves is it's an instrument built for the smartphone world. So what I was saying earlier, most instruments are built in either a non-smartphone world or even non-digital world. For example, I don't know how many people know this. Credit cards came in even before internet, or forget internet, even before telephones came in.
Yeah, I think 50s?
Yeah. So if you look at how credit card used to work earlier, you'd go into your store, give your credit card. The guy would take a photocopy or write down your number. So I don't know if you've seen these old machines
in US
where you put your card, they do something like this. They take a carbon copy of a credit card and you walk away. They submit those carbon copies to the bank debits your accounts.
So
that's the generation from which credit card came in. That's why it says a card number, expiry date, CVV, all of those things. UPI is the first big leap in that change. And I think and that's why India has stayed ahead of it. Instead of adopting an old instrument and trying to convince everyone how to use this old instrument, UPI was built for the smartphone world. And India has taken a leapfrog in that, where you said, forget these old instruments built for the non-smartphone world. Today, everyone in India has a smartphone or a feature phone at minimum. UPI works on both. Use an instrument that is built for that generation. And UPI is completely real-time, completely online, where it allows your two point of consent. First is your phone itself, is the authentication channel. That's the first authentication. The second is your MPIN. So the two-factor of authentication, one is setting on your phone itself, and second is the MPIN that is setting in your brain. And as soon as you put both of those, your consent is done. Now it is used primarily for transactions. So once that consent is given, it sends instructions to your bank that this guy has given a consent, debit money from his account. The money comes in from his account and sent to the other account. The money goes from this account and that account. So NPCI manages the consent part of it. The UPI layers, the apps, you certified by NPCI, undertake the first consent, submit it to NPCI, NPCI submits it to the bank, that the consent has been done, take the money and send it to the other account, and the money moves. But as I said, like it's built in such a modular and broad fashion that I don't think we have extracted the full value of UPI yet. So tomorrow you could use UPI to even do something like KYC. Use UPI to do any kind of authentication that you want to do. It's a consent layer.
Got it.
And that's why, for example, IPO started using UPI. Because once your consent is done and stored, you can debit money later. And that's how IPO mandates work.
Yeah.
The consent is stored in the app. Whenever IPO opens up, you use that consent to extract money from the account and do that
Now
payment.
all IPOs are on UPI. Right?
All IPOs are.
I mean, maybe I think I just started hearing about recently. Can you explain that as well? How does it work? कि IPO में UPI कैसे use करते हैं?
Yeah, so earlier process of IPO is you would subscribe to IPO, you'll give your bank account number, you'll sign and give it, because when the IPO opens up, the price can move here and there. So you give a consent that within this price range, I allow my bank to debit my money from my account when the IPO opens up.
Yeah.
Right. Old process, you submit those documents, the NACH documents and all of those. The guy who's running the IPO, the broker who's running the IPO submits those to the bank. When the IPO opens up, money is debited from the banks and then submitted to the IPO. Very inefficient, paper-based process. Lot of failures, lot of issues. A lot of consents will fail because the signature doesn't match or something doesn't match. The bank doesn't accept it. And a lot of people will be unhappy at the end of the day because I wanted to buy this IPO and I didn't get the allotment. UPI, again, leapfrogs it. So in US, you'd start giving a card number, credit card number, and same thing will happen on a card number.
Yeah.
UPI leapfrogs it into a consent which is done digitally, fully. So on your phone, you give a consent using UPI. Then, hey, I want to buy, let's say, 1 lakh rupees of shares. I gave a consent, put my MPIN, so the authentication is done and stored. So the authentication is stored inside the UPI app.
Yeah.
And whenever this IPO opens up, the authentication is stored, it's with the broker. The IPO opens up, the price is decided, the broker sends a request. It's already authenticated, so money is pulled from an account, sent to the broking house, and the transaction is done. So it's a completely digital way of replacing the paper way instead of going one step like the way US did from paper to then cards and then cards to digital movements. And that movement has been slow. We leapfrogged it directly into digital.
And people can use any UPI app or
Any UPI app.
to subscribe
Any
to.
UPI app. That's the second big part of UPI. Like the reason UPI is so amazing is, so a lot of people try to do that in US, for example, where he said, yeah, card is an old instrument. How do we make a new instrument?
Yeah.
So Venmo came in, Square Cash came in, but all of these were closed gardens. So Venmo works. When you have a Venmo, I have a Venmo, I can send money to you.
Yeah.
A shopkeeper is using Venmo, I am a consumer as Venmo, I am doing that. But then everyone built their own walled garden. So somebody built Venmo, somebody on Square Cash, somebody on something else, and there's Alipay in China, walled gardens. UPI does one thing beautiful, which is interoperability. So there are 10 companies, somebody, like we are focused on the B2B side, we are getting businesses. Somebody else was focused on consumer side, like Google Pay and PhonePe, they're getting consumers. Both of them can talk to each other. So the efforts of everyone grows everyone else and it feeds into everyone. So I did a lot of work in getting all merchants. Somebody did a lot of work in getting all consumers. Both of them talk to each other. So that's why I'm also winning, because my business can do a lot more acceptance. The consumer company is also winning because their consumers can pay at a lot more places. So that interoperability that UPI built, I don't think there are a lot of examples in the world of payment instruments being built like that.
And ये कैसे हुआ? Because UPI, from what I understand, there's initially I think 15, 16 banks came together. They all have to agree to a particular standard, which is a very difficult thing. It's just for, especially each bank is an institution. They have their own culture, way of thinking things. They're also probably their own tough battles and so on.
Yeah.
तो कैसे हुआ ये?
So NPCI did a lot of work. The regulator did a lot of work. The government did a lot of work in bringing people together. And I think that's where India has this amazing centralized frameworks where somebody can bring people together and say, hey, let's do this. So the first framework of UPI was built under iSpirit, which set up the framework and said that, hey, we propose that something like this could happen. The government liked it and said it makes a lot of sense, and then took it forward. Nandan sir played a lot of role in evangelizing it and bringing people together. Then RBI adopted it, and RBI said it makes sense and gave it to NPCI to implement. And NPCI set up those first standards for UPI, brought banks together. Not every bank agreed on day one. A lot of banks felt that this is going to take away our control because suddenly money could move out of my accounts immediately. So when people come to my branches and want to move money out, I can control. If too much money is moving out, I can reduce it, I can make it harder, I can shut the branch. But if UPI is something like UPI comes up, suddenly money can move out. So a lot of banks had those concerns. Then regulator and the government had to play a lot of role in consoling people that this is good for the ecosystem. To give an example, like when ATMs came in, banks had same worry that suddenly some people can withdraw cash. A lot of cash will be withdrawn. But if you look at today, because ATMs are everywhere, people carry less cash in their pocket. So same was the logic with UPI. If UPI is everywhere, people will withdraw your money even less. Because now they withdraw only at the time of consumption. People don't withdraw and store money that, hey, suddenly I'll need tomorrow. You withdraw at the time of consumption. So I think that long-term vision somebody had to bring in. So, and that role had to be played by policymakers, government, regulators, and everyone had to play a lot of role in bringing people together. I think initially the top 2 or 3 banks didn't come on UPI for these years, but everyone else came on board and everyone else started onboarding. So when we went live with UPI, I think in 2016, we were the first. So UPI initially went live only as a P2P instrument, that you could send money to somebody, but not as a P2M instrument. We were the first player to go live to enable UPI for P2M transactions. So in fact, Nandal sir tweeted about it that UPI, in fact, UPI was not live in offline world. UPI went live in online world first because we adopted it. And we made it available to all our merchants on day one. And suddenly people started using UPI for commerce purchases, for making payments to businesses. And the best part about the interoperable instrument is as it kept feeding, as it kept growing, then people went to those few banks who were not on board UPI and said, why are you not on UPI? I'll move. Like people, I know people opened it as not. I think Axis Bank was the first bank to go live with UPI. People started opening their account in Axis Bank because they wanted to use UPI. And then every bank started feeling that, hey, I'll lose a lot more if I don't come on this. And they started coming on this, and that's how the ecosystem grew.
And eventually UPI became an example of, I think, of people what now called digital public infrastructure, these rails on which companies like yourself and many others can innovate, and now this whole emergence.
All of these, so the Jan Dhan, Aadhaar, mobile was the baseline of UPI. At first Jan Dhan, everyone had a bank account. Aadhaar, everyone had a way to do KYC. And everyone had a mobile phone. UPI builds on top of that. It's a layer on top of that. Now that you all have all of this, now you can do UPI.
Yeah, I think UPI is a great case study, and I think perhaps need to be studied more deeply, because as a country we have the position to leapfrog many different things and create this countrywide digital infrastructure to.
I've seen people compare that. Hey, there's Apple Pay and there's Venmo. What's special about UPI? I think it's hard for people to understand that the interoperable nature, the public-private participation nature. And the low cost, the marginal cost is effectively zero. Low cost at which UPI is delivered, it cannot be compared to anything else in the world. And I think those 3 or 4 things really segregate it from anyone else in the world.
But one key choice in UPI, there is this in credit card business. There was this idea, MDR, right? And I keep forgetting. MDR stands for
Merchant Discount Rate.
Merchant Discount Rate, which is basically the commission that likes of Visa and MasterCard make, and historically used to be anywhere between 1 to 3%, which is a substantial amount of money, and that's why these companies are so big and powerful and so on. But UPI, the decision was taken to keep MDR as 0, which effectively eliminates, you as a payment provider can't make money. And today we read, that, I think for you also, I think you processed payments worth hundreds of billions of dollars, some other platform even $1 trillion plus and so on. But there is no money to be made from that. Is that, how is that choice, affecting just the profitability and able to really make money to be able to invest back in the tech?
So first of all, zero MDR was not initially there in UPI. It came much later. I think it came around demonetization, slightly after demonetization. I think because there's a lot of push and all of that to drive adoption. I think it played an important
role. What was MDR before?
Various. So debit instruments typically used to have less than 1% MDR. It used to vary from 0.25% to 0.5%. There was always MDR. Biggest growth of UPI happened when MDR was still there. But it was driven to make it mandatory for business to accept UPI. And because if there's a cost with the instrument, the government can't make it mandatory. So when they made it mandatory for business to accept UPI, they added this because otherwise you can't force businesses to pay money. And I think it was a good short-term measure. I do believe that long-term it's going to make it the ecosystem unsustainable. So there are 2 parts of it. One is P2P should always be free. And small merchants should always be free. I think so. MDR for small merchants and MDR for P2P transactions should never be there. And I fundamentally believe that. But I think for large merchants at some point, MDR is going. First of all, people need to understand it's not free today. The government is paying for it. There's a heavy incentive. Even yesterday, the Prime Minister posted there were 1,500 crores more incentive for UPI small value transactions. So there's a heavy incentive being given by the government, which is subsidizing the infrastructure today. Because there's an infrastructure to maintain this ecosystem.
The infrastructure is what cost NPCI incurs.
So, NPCI incurs, banks incur, payment service providers incur, fintechs incur, everyone incurs a cost because there's people, there's resources, there's server cost, there's tech cost. It's low, but it builds up at scale. And we are doing today 100 billion transactions on UPI. So, of course, there's a sizable cost to running that infrastructure. the government is paying for it, which means it's coming out of taxpayer. The cost is coming out of the taxpayer, right? One way or the other. So I believe the reason I believe that MDR needs to come in for large merchants is so that the taxpayer can stop subsidizing it. So, and Amazon is paying for, so when you're buying, let's say, a 200 rupees book from Amazon, whether you buy from credit card or UPI, Amazon charges you the same.
That's right.
On credit card, they're paying 2%. On UPI, they're paying 0. So essentially, the taxpayer is subsidizing Amazon's cost of transaction. And I don't think that's right. So at some point of time, the large merchants, the Amazons, the Flipkarts, the Reliances of the world, which have the biggest load, 80% of the load on UPI, at least P2M, comes from large merchants.
Got it.
And if those large merchants pay for this, then the small merchants can be subsidized by the ecosystem itself. The taxpayer can stop subsidizing it. It can remove a significant hole from the government's budget. So I think at some point it should change without removing cost, without removing zero MDR for P2P, without removing zero MDR for small merchants.
Are you optimistic about this changing? Because it can fundamentally change the business model for a lot of these fintech companies in India.
I think it's it is an inevitable. I don't think the taxpayer can keep subsidizing it. There's no reason a taxpayer can subsidize it. Like the same reason we charge toll on the roads. I mean, road is a public infrastructure, and probably more important than UPI in many ways. But we charge tolls on the roads, and when we charge trucks more, we keep two-wheelers free. We can charge trucks a lot more. The same logic. Trucks are moving the largest amount of goods, using the road infrastructure a lot more damage to the roads. They should pay a lot more. A two-wheeler which is using for a short-term commute shouldn't pay for it. Same logic applies for UPI.
When I was just going through some stats about fintech industry in India and so on, one of the things I came across is there are at least 26 fintech unicorns in India out of whatever 120 or so, which is a very large.
Third largest or second largest in the world,
It's third largest in terms of number of
fintech unicorns.
Why so many? Why is the financial services are obviously important. Money matters to everybody, and money needs to be efficient and so on. What has driven so many entrepreneurs to build different type of solutions? It's a pretty meaningful number.
So two reasons I'll say. One,
and all that without MDR. With MDR, who knows?
If you look at from macro perspective, look at our stock market. Some of the largest stocks in the country are banking stocks and financial services stocks. So that shows that there is a lot of opportunity in this segment because it's not even private markets, even public markets. There's a lot of money in financial services. Financial services is one of the biggest segment in Sensex today. Second big reason is that financial services is one such segment where international players can't just come and win. So a lot of segments in India are captured by international players like FMCGs and so on. Amazon, Flipkart is a typical example and so on, where global companies come in, bring their models and win. Financial services is one segment where global companies haven't been able to win. It's mostly local companies that have the opportunity. So that creates a lot of room for local companies to innovate, segregate, because the way Indian financial services operate is very different than the rest of the world. The second reason is things like UPI, which are far ahead of the rest of the world, gives an opportunity for our companies to innovate faster than the rest of the world. So that creates a lot of opportunity, and that's the reason you have a lot more unicorns and a lot more funding in this segment, because one of the few segments, the largest stockbrokers in India, none of those are global. The largest insurance companies are all Indian. The largest wealth platforms are all Indian. So financial services is one such segment where local companies win.
And is it also because there is some regulatory protection as well? The foreign companies can't come in and buy these companies?
In some segments, like in, for example, lending, there is regulatory restrictions, there is FDI restrictions. But in a lot of fintech companies, while they're called fintech, they're actually tech companies. And in tech, there's no such restrictions per se. But even then, it wins. Like, so for example, Google Pay is still a very large player, one of the largest players in the UPI world. And it's a foreign player, right? But still, there's an opportunity for a lot of local players to win. So if you look at UPI, like PhonePe and Google Pay are all both essentially foreign, but have still been able to win. But there are a lot of local players in different segments, like credit on UPI, like on AutoPay, like doing lending, doing broking, and all of those things. So yes, some segments are restricted, but a lot more segments are open. Still, local companies have won.
And do you think in fintech, the eventual fate of all fintech companies is to get into lending?
I don't believe that. Right. So we are a counterexample of that. Like we
have lending business.
We have lending business, but we have been on record to say our significant portion of our revenue, unlike a lot of fintech companies, will not come from lending, not even in the future. The significant portion of our revenue comes because of the services we provide for businesses. They pay us for those services. The lending is a component, but a small component. The reason we do lending is not because of revenue, because our businesses need lending. The SME lending is one of the biggest unsolved problems in the ecosystem. Most SMEs still struggle for lending, and if we can do something to make it easier for them, we want to do that. But our core proposition has always been technology and product.
And this SME lending, why still unsolved? Because a lot of people have been trying. I think whenever half of if the fintech entrepreneurs, newer entrepreneurs reach out, all trying to solve it for SME of this category or that category and so on. Where is the struggle coming from?
So lending has generally is built on two base things, right? One is underwriting, second is recovery. Underwriting is, do you have an ability to pay?
Yeah.
And recovery is, do you have intent to pay? Right? And both have been hard in the SME segment in India. Like the underwriting, the ability to pay has been complicated because like a lot of SME collections have been done through cash and unverifiable instruments where it's hard for you to figure out like what is the real size of this business.
Yeah.
So you go to a small shop, 50%, 60% of collections are in cash. You don't know how much of it is real, how much of it is not. Right? So that is the ability to pay. The second is intent to pay. How do you ensure even the guy, like, so you typically give out a loan, hoping that the business does well. The business does well, you hope that the business will pay you back. Now, having strong collection systems have been weak. So how do you ensure that the business pays you? One of the biggest challenges is that the business does well, but doesn't pay you and goes on to spend their money on their own. Right? So strong collection systems haven't been built. So SMEs have both big problems. The first is the biggest problem, which is underwriting. And even if you have underwriting, how do you ensure strong collection systems? I think there are tools coming up which are making it easier. So NBFC AA, the account aggregator framework, one of the biggest things that it solves is it makes it easier to underwrite ability to pay.
Okay.
So by bringing in things like all different bank accounts, all views from those bank accounts, and now GST is being added to it. So you can see people's GST reports, their bank accounts, their collections. Now with e-way bill reporting, you will have e-way bills. So you can verify the ability to pay much more strongly. And I think that's the step in that direction. NBFC AA, along with the e-way bill framework, should make it easier, and along with GST, should make it easier to do ability to underwrite. And then second is the intent, which is recovery. And this is where things like digital mandates, UPI auto-pay, make it easier for you to do collections so that as a business does well, you can auto-collect your money. And I think both of those things are scaling in parallel. I think it's a matter of time before we make it easier and make it more and more easier for SME lending to happen. A lot of companies have come up, right? Like a lot of companies have come up basically targeting this, that how do you use underwriting, new age underwriting and new age collection tools to make it easier for SMEs to get loans. And it has become better. I think we're still not fully there yet, but I think it's a matter of couple of years.
So in fintech, there is a batch of, the batch which I think your company also belongs to, say 2013, 14 till 2017, 18. These companies were founded. In some ways, they got in early. They did the hard work of, really struggling, dealing with 100 no's and all of that. And then I think both demonetization and pandemic provided huge tailwind. And as a result, it attracted a lot more fintech entrepreneurs later. But most of them are not breaking out. I will be hard pressed to think of a fintech company that started after 2020 onwards as getting to any meaningful scale, let alone any kind of unicorn milestone in sight. Is it really harder for?
I disagree with that a bit. So I think what we are seeing is that there were more horizontal fintechs, and it's not just fintechs. I think in most industries, we had more horizontal companies. The first generation of internet companies were horizontal companies. So even in e-commerce, there were marketplaces and so on. So same in fintech, there were things like companies solving for payments, companies solving for insurance, companies solving for broking on a more horizontal level. Because the market was small, the only way you could build was go horizontal and cover every aspect of the market. So insurance for everyone, broking for everyone, and payments for everyone. Because that's the only way to win in a small market to make it sizable. I think we are now seeing a next generation of companies where people are taking more focused problems and going deeper there. To give an e-commerce example, we have D2C companies coming up, which are going brand first and saying, I'll build a suitcase brand, I'll build a socks brand. In fintech, we're seeing something similar happen. We're saying, I'll build a savings first company, I'll build a wealth management for HNIs and so on. So like an example of companies that are doing really well in modern generation would be like things like companies like JAR, that focus on savings, Stable Money, which are focused on fixed instruments, fixed income instruments, and so on, which are coming up. In broking, we have seen Dhan being a big breakout, which is focused on high frequency traders and how to give a better interface to them. So I think we're picking up more niche and narrower problem statements and then going deeper into that.
Got it.
And I think that's the maturity of the ecosystem, that you can go niche now and still build a large company. Right. And so, I mean, Dhan is doing really well, Stable Money is doing well, Jar is doing well, and they've picked very, very specific niches. Jar is not saying savings for everyone, they're doing micro savings. And I think that excites me more, because now we're picking harder problems to solve, because we can go deeper into the problem statements. I think we'll see a lot more companies coming up in that bucket. Another reason has been, of course, there's been a general decline of funding in the entire ecosystem, but I think that's picking up again.
That's the seasonality to it. I think this whole 21, 22 excess is, I think, finally almost flushed out from the system.
Yeah. So,
and I think all the IPOs are helping, which I think you are also, IPO is somewhere on the near horizon for you.
Somewhere still a bit far. I think we're still about 2 years away from public market. I think it's also, we want to be more internally ready. But yeah, 2 years.
Yeah. I'll just come to your IPO in a second, but or in general the IPO scene. But just, so if you are talking to, let's say, batch of 25 entrepreneurs who are going to start this year, you think fintech is still a very important category for the people who are interested in this area to consider?
Definitely. As I said, like, we've solved a lot of problems. Are we at the end state? No. I think we've picked up a lot of horizontal problems. There's still a lot more focused problems that can be solved for. You want to pick up something simple like insurance, right? We've solved insurance for broader masses, but have we come to tailor-made insurance? For example, in US, when you take insurance today for a car, they look at your car history. Where do you drive? What kind of car are you buying, and given insurance according to that, a tailor-made insurance product. We still don't have that in India. You buy one single insurance policy, which is universal for all. So whether you are buying the insurance policy in Bangalore or I am buying the insurance policy in Jaipur, the chances of an accident are very different, but you're paying the same price.
Got it.
Tailor-made solutions are going to be much, much more rampant. And then with AI, everything is about to change. So if you add AI to that mix, the depth to which you can go, the personalization to which you can go is going to be massive. And it's going to be harder for older companies to adopt to that change. It will be easier for newer companies to come in and change their paradigm.
Let's talk about AI. In your company, how are you approaching adoption of AI? Is it starting to have material impact into how you run the business?
Yeah, massive. And honestly, every day I feel, are we doing enough? Honestly, it's hard to say we're doing enough, because there's so much change. So first, when AI came in, we said, okay, let's put a team and let's find what all can we do with AI and then try to adopt that. That's a bad approach.
Yeah.
Right. Because with fundamental technology changes like this, you can't have somebody say, hey, you pick it up and you do it, everyone else does their job.
Yeah.
With fundamental technology changes, so it's like when internet or technology first came in, people created digital teams and said, your job is to make the company digital, everyone else does their job the way they do. Doesn't work. We've clearly seen that pure digital companies win long term. Same for AI. Unless your pure AI first grounds up, you're going to lose long term. Because if you're just doing AI as a patchwork that, hey, your job is to do AI, these 3 people do AI, the next 100 people do their job, you're going to lose with somebody else where all 100 people are doing AI. So you need to train your entire workforce on AI. You need to embed AI into everything.
What does, maybe give people a specific test. What does training entire workforce look like? Is it like every week, 5-hour training, or is it 3-month boot camp?
No, every teams pick up their own champions and then do their own training, figure out what tools they want to use. And then there's a lot of cross-functional training that happens. So, for example, our marketing team was the first one to adopt AI.
Yeah.
And today, everything, all of our marketing campaigns, all our ads, all our posts, all our case studies, everything is just AI. Like, it's fully built on AI. It was easiest for them to adopt. We ran a ET campaign last year. Yeah. We did about 100 print ads every day. We couldn't have done it without AI. Because creating 100 ads every day.
These were, print ads in Economic Times.
We featured one founder every day. So we picked up one. We had Dipinder, we had Fool founder, we had multiple founders from various companies come up. So we did one ad every day. We had, for example, when we did Dipinder, we have him feature, and we had an ad completely designed in Zomato's design language.
Yeah.
Right. For every single ad, it would take us like a week to build one ad. So I would do 100 ads every day for 6 months. Couldn't do it without AI. So our marketing team ran the campaign. Every single ad was produced on AI. Right? Today, our website, for example, half of it is generated on AI. So go to our website, we feature founders on the website. Every single image is generated using AI. So those kind of things, like you can't say that one team picks up AI and figures this out. It is not going to happen. In tech, for example, we started adopting Copilot. Copilot is the easiest adoption. give every engineer Copilot. But now we are driving adoption. Like there are some engineers who are still not using Copilot. Why are they not using? How do we train them better? Because if an engineer is not using Copilot, then somewhere they're performing significantly behind every other engineer who's using Copilot. So if 30% of my engineers are only using Copilot, and there is an organization where 100% engineers are using Copilot, you're going to lose long term.
Yeah.
So it needs to be trained. You need to retrain. You need to drive adoption, and then you need to measure it. How many people are using it? How many outcomes are being produced using Copilot? And if it's not happening, you need to retrain. You need to re-look at that.
As CEO, how important it is for you to learn what's going on in the AI, because it's a very fast-moving environment. New breakthroughs coming continuously. Do deliberately spend time trying to learn about what's happening?
Yeah. And it's hard because the ecosystem is changing so rapidly. For example, a couple of weeks back, I downloaded the Replit app, the AI generator app.
Yeah.
And I was completely wowed. I said, the world is changing so rapidly. Replit, if you've not used, like it's a app where you tell it that build me this app, and it builds you an app.
Yeah.
Like it's just as simple as that. So I wanted to build a food tracker for myself. That build me a food tracker. There are 1,000 food trackers in the world.
Yeah.
But my particular problem was I have a hard time figuring out, hey, I ate this much dal today and this much roti today. I wanted a food tracker app where I send it a voice note, figures out what I said in it, and inputs my food.
I'm not familiar with this one. Replit. REPLIT.
LIT.
Replit. It builds the entire app from scratch based on just voice prompt.
So I told it that build me a food tracker app where I give it a voice note every day. This is what I ate, and figures out what I said in that voice note, builds me macros, give me a tracking. I just said it. It built the entire app. It integrated OpenAI into it. It asked me for an OpenAI key. I gave it an OpenAI key. It built the app, deployed it, made it available. I'm using it.
Incredible.
In like 20 minutes. It was like chatting. Like you can do it in your office commute.
Yeah.
And when I did that, I was like, this is mind-blowing.
Yeah.
And okay, maybe it's not perfect to the point where I can build a large shippable platform today where thousands of people can use it. But for personal apps, it's amazing. And you can see where it's going now, because today I can build personal apps on it. Tomorrow, the entire ecosystem is going to be built around it. The world is going to change massively. And as soon as I did that, I told all my CXOs that everyone needs to download this today. Start using it today.
Yeah.
Because now when your teams are coming to you and saying, hey, this prototype is going to take 3 weeks to deliver. You can say, hey, I built it myself tonight. Like, how can it take 3 weeks to deliver? So if you don't know how to do it, and you can't question your teams. And now when we are doing a next year planning, we're saying every product manager will have access to Replit or Lovable on day one.
Yeah.
So that when you come to now with a product spec, you build the first prototype yourself instead of asking an engineer to build it.
Yeah.
And then tell your engineer that this is the product spec, this is the first prototype. The time to translate from a product spec to product goes down significantly.
That is incredible. And this is also reminding me, I think, in the Razorpay history, you guys have had very strong product first mindset and a little bit of, trying to be on the cutting edge of whatever is next. I think this, the fact that when I'm finding this is a powerful idea. In fact, I'm also going to now copy. And the people I'm working with, instead of presenting a spec or PowerPoint slide, or just build a damn prototype and just show visually how it looks like. But it has been a big part of the Razorpay being a very product first company.
Yeah, I think that comes from Shashank, right? Like we are product founders, and that's what we are good at. And the other advantage is that the kind of business we are in, our differentiation is all product. So for example, in a e-commerce company, people will not use Amazon because Amazon is the best app. People will use Amazon because it's the best delivery timeline, best product quality, and so on. In our business, it's just product. If my latency is lower than the other guy, if my time to completion is better than the other guy, people will use my product. There's nothing else to differentiate on. So and that's what I keep telling my teams. And the other thing in product differentiation is any product difference you build today holds for only 3 months. The world moves very fast in tech world.
DeepSeek found that out very quickly.
Yeah. So you build any moat, you say, hey, this is my product mode. I have the best product today. Holds for 3 months. And that puts a lot of obligation on you to constantly innovate. So if you're not shipping out new products, you're getting obsolete every day. And that is it's essentially like a chip on our shoulder that we need to differentiate every day, because every day if you're not differentiating, we're getting obsolete.
Got it. Yeah. Are you willing to venture guess how much will AI transform businesses next 2, 3, 4 year time frame based on what you are seeing? And if you were to extrapolate the exponential growth, how do a business like yours, others look like few years down the line?
I think the base, the broad macro outcome is that any company which is not AI first by DNA is going to lose. It's a matter of time. Maybe in some spaces it will be a matter of 3-4 years.
Yeah.
In some regulated spaces it might be 8-10 years because you have to have some modes, but it's a matter of time. You're going to lose. It's like technology. Like today, if you say any company which is not using computers or digital technology is not going to survive, it's going to be same with AI 10 years out. Like if you're not company is not AI first, not having AI on the side and having 10 people focus on AI. AI first. If your workforce is not AI first, you're losing because the delta is going to be so massive. Like 2 people teams today can build products which take 100 people to build 2 years back. And the delta is so massive.
Yeah.
There's no way you can outcompete it.
Yeah. Look, company like yours, which is, always been product tech first, can attempt to be AI first. But most companies in the world are not tech first.
Yeah.
How do those companies even have a shot at being AI first?
Today, if I go back, any company which was not tech first has become tech first. They've been forced to. Like last 10 years has forced companies to either become tech first or lose to other players who are tech first. So if you look at, like, for example, if I become even regulated segments like broking, the largest all stock brokers today are all tech first companies.
Yeah.
Like Zerodha, Growth, Dhan, Upstocks. Right? All tech first companies have become the largest brokers.
Yeah.
The brokers which were not tech first have all lagged behind.
Yeah.
This same is going to be applied to AI. If you're not an AI first company, you're not going to be the largest stockbroker in the world. You're not going to be the largest insurance company in the world. You cannot be the largest e-commerce company in the world. You cannot be. It's because the delta is so massive and like you can't even compare to it. So you can't say, hey, I have a lot more money so I can find a way to manage it. It's not going to happen that way.
Yeah, which is amazing, I think, for just, I think both of you and I are part of the whole, startup ecosystem in the country. And in some ways, great news for the prospective entrepreneurs because now you can do so much more with so little capital. And I think it's going to be, and there's opportunity
for founders and entrepreneurs. I think any step change is a big opportunity.
Yeah.
If things are stable, then by default incumbents win. Right? Because if things are stable, incumbents have more resources, they have more money, they have more capital, they have more distribution. The only thing for entrepreneurs can differentiate on is when there is a change. And the biggest advantage the startup founders have is that you can adopt change faster than incumbents can. So when there is a change, to your point, there are companies who will lag behind in this change. And that is going to be an opportunity for startup founders to come in and say, hey, this industry is moving slowly. I can bring this change faster and win.
And as a founder, do you have that whole, that Andy Grove's only the paranoid survive kind of mindset?
Yeah.
You worry about who's going to disrupt you next?
Oh, yeah. I am very paranoid by nature. Okay. So I spend a lot of time. Anything new happens. I think, first of all, we have taken a very different, very hard to hold brand positioning. You said we are going to be the most innovative company in our space. That's been our brand promise. That's what I promised to our merchants.
Yeah.
And hey, if you're using Razorpay, anything new that happens in the ecosystem, we'll be the first ones to bring you. That was easy to say, but it's harder to hold, especially as a company goes larger. Yeah. So that means we have to do a lot of experiments, a lot of things. Some of those fail, but we have to do that because that's the brand promise we have to hold to. So if something new happens in the ecosystem and we are not the first ones to do it, I'm the first one to catch it and ask my team, why did we miss out on this? What is the reason? Like, was it lack of resources? Was it lack of ambition? Why were we not the first ones to launch this out? And that's the reason we constantly keep shipping out. For example, no payment company in India has launched AI-based payments before Razorpay. We have launched AI-based payments in February this year.
What does AI-based payment look?
Which means if you're building an AI agent today, you can use Razorpay to accept payments inside your agent. So what that means is agentic AI is going to take off in a big way. Yeah. And we foresee the future where tomorrow you're going to ask, find me a flight from Delhi to Mumbai for tomorrow.
Yeah.
It says this is the flight. You say, book me this flight.
Yeah.
But somebody has to handle payments in that. So we have built an AI agentic SDK payment platform where the AI agent can call our payment SDK, initiate the payment. You can enter the OTP inside the chat and complete the transaction. The first ones and only ones in India doing this. Because it's probably not going to happen for next 2 years. Maybe not happen in the next 3 years. We don't know. But when it happens, we have to be the first ones to be there.
And as a CEO, founder, these are some of the things you're driving it directly from the front lines, or this has also become somewhat cultural in the organization? And have you done something to make it, kind of culturally embedded in the DNA of the company?
I think it's both. I think anything that's cultural has to be driven from the top. So if I am not doing it, it's not going to be the culture. So it starts with me doing it and me constantly holding our team to that standard. But because as you keep repeatedly doing it, people learn it and learn to preempt it.
Yeah.
Right? So nobody likes me coming in and saying, hey, why did we miss out on that? They want to be ready with that. So I think that's gone deep into the company where every single product leader, business leader keeps asking. So anything new happens in the ecosystem, even before I ask my leadership, the leadership asks each other, why did we miss this? How did this happen? And where are we on this? When are we going to launch this? And so on. So now it is deeply cultural, where every single person in the organization keeps asking. We have an open Slack, and sometimes our employees will post, anyone, like a salesperson will post, hey, this new product got launched, why is Razorpay not doing it? Right? So it's become deeply cultural, where every single person holds ourselves to this now.
Got it. We briefly touched upon this whole, the IPO scenario. We've had, I think it's been a great year for last 12 months for Indian companies IPO. Many have gone IPO. Many more are, I think, lined up for this year. And finally, investors seeing exit and so on. And one of the things these IPOs have triggered is also this whole reverse flip back to India. I think you are also going through the same process.
Yeah.
So first of all, what is the thought process? What changed? It was conventional wisdom, some years ago that you register somewhere outside Singapore or US or Cayman or whatever. But now companies are finding it a lot more fruitful to come back here, which sometimes the cost is also could be prohibitive. Still, people are willing to pay. What is the thought process? How you internally thought about this, and why both for you as well as in general, why are companies coming back?
I think first going to why companies used to incorporate outside, right? So 10 years back when we were starting Razorpay, first, most of the investment used to come from foreign investors, which were generally more comfortable with foreign jurisdictions because they hadn't seen India. A lot of them had never invested in India. So for them to understand India's legal structures, India's codes, how would you pursue if this doesn't go right? Where would you pursue it, and so on, was hard. So most contracts have a place of jurisdiction for the contract. For most foreign investors, it was hard to understand how can a place of jurisdiction be India. What will we do? We've never done anything in India. That's first. Second is from an outcome perspective, most private companies either get acquired, in which case it probably doesn't matter. The other thing is IPO. And there's no visibility into having a large IPO market for tech companies in India, because not a lot of tech companies had gone public 10 years back. So because of both of those reasons, there was a lot more comfort in foreign investors to have a company incorporated in Singapore or US, where at least they understand the laws, and there's a possibility of going public there. I think last 10 years, because of the way India has done, the way our public markets have done, the way tech companies in India have done, I think that has changed. That mindset has changed massively. I think it's a great thing where today, India has a thriving public tech market, public tech IPO market. A lot of companies are going public in India. And B, the Indian regulations are well understood. The ease of doing business has come up so significantly, where most public markets in the world are comfortable investing in India. And I think because of that, for a company like us, it makes no sense to now list in a foreign jurisdiction where nobody knows us. Like if I list in US today, nobody knows Razorpay. I have to explain, every year I have to go there, explain to shareholders, retail shareholders, that, hey, this is what we do, this is how we are important in India, this is what we are planning to do, this is what UPI is, and so on. There's so much education we'll have to do. It makes no sense to list there. Versus in India, where everybody uses Razorpay in some shape and form, everybody's touching with interfacing with Razorpay in some shape and form. I don't have to do that much teaching. So it logically makes no sense for me to list outside India. So yes, there's a heavy cost to do that shifting, but in the larger scheme of things, that's a small price to pay.
Got it. As a fintech CEO, what percentage of your time goes in dealing with regulators?
I'll say overall, dealing with regulators is a broad statement. So if it's day-to-day dealing, there's a team. There's a large compliance team that deals with regulators on a day-to-day basis, which is general queries, submissions, reports that we submit, audits that we have to do, all of that. Where I would spend time is larger industry discussions, consultations. So our regulator has been actually fairly open in the sense they do a lot of consultations. So any new thing happening, if anything new change they're proposing, for example, it's a biometric authentication. They'll float out a consultation paper, they'll call for meetings, they'll hear our inputs. That's where I have to spend time. So I'll say 12 to 15% of my time goes there. And that's something that's useful to me because I also want to hear what the regulator is going to open up next. What the regulator is thinking of moving, the direction that the regulator is going to take up next. And so that we can be prepared, we can find a way to adopt those changes. So a lot of changes in the ecosystem have actually been driven by regulators, positive changes in the ecosystem. Things like tokenization happened because of the regulator. Recurring payments enablement happened because of the regulator. UPI auto pay happened because of the regulator. As I said, biometric authentication is going to come up because of the regulator pushing it. So a lot of my time is spent on that side to participate in those industry discussions and consultations.
Would you like to see pace of reform like driven by regulators, because it's a regulated industry and you can't, while you want to be the most innovative company in this space, you're somewhat dependent on what you can do and cannot do based on the current regulation framework. Is there a need for that to accelerate? And
I would say accelerate, because honestly, at times, like I don't know if you have ever been to GFF, the Global Fintech Fest that happens every year in Bombay. The amount of things the regulator announces, the fintech industry takes a year to catch up to them.
yeah,
And because they announced a bunch of stuff. Like last year, they announced ULI, Unified Lending Platform.
Yeah.
They announced credit on UPI and so many other things. And industry has to take a lot of time to adopt a lot of those changes. So I think the pace of changes is good as it is. I think where the opportunity is that regulator has opened up a lot of sandbox programs. And this is where we participate and a lot of companies participate. Where the regulator says, if you want to do an innovation, let's say Razorpay wants to do an innovation, you can go to the regulator, participate in the sandbox program, do it in a limited fashion, submit results to the regulator, and then expand it.
Got
And that's an interesting approach. And I think a lot of fintech founders don't leverage that ecosystem as well as they can. So if you want to do an innovation where you feel the regulation is restricting you, submit it in the sandbox program, apply for the sandbox. If they allow you to do a limited testing, maybe in a city, maybe in a state of that sandbox product, if it goes well, you submit results to the regulator, they'll open it up for you.
Got it. So on the whole, it sounds like it's a pretty forward-thinking regulator. There is a decent pace of innovation. We've seen all that happen through UPI and other things over the last 8-10 years, which is probably bodes well for the future of whole fintech industry in India. Just my last question, zooming out, it's been 12 years you've been building this company. Now, you must have, grown and evolved as a leader. Right now, like, what is your approach to kind of building business? How much of you think about long-term things, building strategies and roadmaps versus, driving innovation and culture on a day-to-day basis and so on? Like, what's your operating style about, steering this business now?
See, I think, so I'm generally a hands-off leader. So we have a good team of executives which owns different aspects of the business. So I don't have to get into day-to-day operational aspects of the business. That next quarter, next month, next 6 months, there's teams that are placed to take that. Where I have to spend time is two things. One is the long-term aspects, which is what does next year look like? What do the next 5 years look like? What do we need to do today for us to ensure that we are relevant in the next 5 years and not getting obsolete? So that is one side of things, which is a long-term direction. The second is the cultural aspects. How do you ensure? One of the biggest challenges is the company grows larger. You don't lose your DNA. You don't lose your core culture. What made you successful today? How do you ensure you don't lose the fabric of it? And that's where a founder's time has to go a lot more. In fact, it has to go up the amount of time you spend there as the company becomes larger, because it's easier to dilute that out. And it happens slowly, but it builds up over time. And the way I do that is two ways. One is on the consumer side. On the customer side, I spend a lot of time talking to our customers. So irrespective of the discussions and meetings and internal reportings that I'm part of, I speak to at least one customer a week. And that's my way of testing. That, hey, whatever my team told me, is this true? Is this holding true? Whatever my team said that this is where the world is heading, is the customer saying. So my team comes and say, this is the biggest problem statement our customers have, let's solve this. And every week I meet my customers and test that. Hey, what if we build this feature? Would you really care about it? Would you not care about it? Do you really feel this is a problem? So that's one thing. That's how I ensure that we are constantly relevant to the business customer. Second way is on the employee side. I constantly host meetings or skip levels and all of that with ground teams, where I'll interact with them and try to understand, like, what are they feeling? How are things changing? DNA wise, are they seeing the same things? Are things changing? And I think there's enough ways to test that out. So that's the second way. That's the second thing that I do on the employee side to ensure that we are not losing our core cultural fabric. So I think that's broadly how I would spend my time, besides external stuff like investors, media, and so on.
But you're definitely doing something right. I think Razorpay is very well-respected company. And also in the category of, product-first companies, I think we need a lot more such companies like, Razorpay, Zomato, which are really pushing the boundary, Zepto, just building a very unique value proposition, obsessing about the product quality and translating into some kind of company culture, etc. So it's great to see, what you have built in a very short period of time of 12 years is nothing, having a startup, experience. My own journey, I can relate, 10 years just go in a blink of an eye. I think what you built is commendable. And it looks like you're also very well positioned for, I think, next decade is probably going to be even more exciting. And I'm sure you're paranoid enough to make sure no one disrupts you. But hopefully you leave some space for the new entrepreneurs as well. But thanks for talking to me, Harshil. It's great, really enjoyed talking to you.
Thanks a lot, and I think it means a lot coming from you. I don't think I've seen any entrepreneur in India who's done multiple large business build out the way you have. So it's amazing to hear that from you.
Thank you, Harshil. At SparX, we aim to bring to you stories of exponential impact. We share in-depth analysis of what goes behind success stories. If you find our conversations interesting, you can join us by subscribing to our YouTube channel. You can also listen to SparX on Spotify, Apple Podcast, or any other audio platform of your choice. If you have any suggestions on who we should invite or what topics we need to cover, just let us know in the comments. We are always listening, looking for ways to improve, and keep getting better as we go along.